Canada now finds itself at a strategic inflection point as it shifts away from its decades-long reliance on the United States for energy exports. In response to evolving geopolitical dynamics and potential U.S. protectionist measures, Canada is actively reorienting its trade strategy to embrace new markets in Asia and Europe. Central to this transformation is the recent entry of China's Rangsheng Petrochemical, a major independent oil refiner, into Calgary, Alberta. Rangsheng's decision to establish operations in Calgary is more than a commercial venture. It signals Canada's determination to break from its traditional energy export model. In its inaugural deal, Rangsheng acquired Canadian heavy crude from Suncor Energy, underscoring a shift in the global energy landscape. Notably, the company transitioned its procurement from delivered at place (DAP) to free on-board (FOB) contracts. Under FOB terms, the refiner takes ownership of the crude oil at the loading point, which provides greater flexibility to reroute shipments in response to global market demands. This flexibility is crucial in a volatile pricing environment, allowing Rangsheng to seize arbitrage opportunities and optimize profitability. Adding further weight to its Canadian operations, Rangsheng appointed industry veteran Wang Jie as its general representative. With a background that includes founding PetroChina International Canada Trading, Wang's experience is expected to be invaluable in navigating the North American energy market and forging strong ties with local producers, midstream companies, and regulators. This strategic pivot is closely aligned with Canada's broader plan to boost energy exports to Asia, a goal long hindered by infrastructure limitations. The completion of the Trans Mountain Expansion (TMX) pipeline in May 2024 has been a game-changer. After years of extensive regulatory reviews, environmental debates, and consultations with Indigenous communities, the TMX project finally tripled the Pacific Coast's crude export capacity from roughly 300,000 barrels per day to nearly 890,000 barrels per day. The TMX pipeline's development was fraught with challenges. It had to overcome environmental concerns, such as the risk of marine spills and increased greenhouse gas emissions, and address the complex issues raised by Indigenous communities along its route. Despite these hurdles, successive governments recognized the economic and strategic necessity of the project. With its completion, Canada can now reliably ship crude to burgeoning markets in Asia, including China, South Korea, and Japan, thereby reducing its historical dependence on U.S. infrastructure and market access. The urgency of diversifying export markets has been intensified by the looming threat of U.S. tariffs. Recent discussions within parts of the U.S. administration have raised the specter of a punitive 10% tariff on Canadian oil and gas imports. At present, the United States imports about 4 million barrels of Canadian crude daily, roughly 62% of its total oil imports. A tariff-induced disruption could have serious ramifications. Many American refineries, particularly those in the Midwest, PAD2, and along the Gulf Coast, PAD3, are highly optimized for processing Canadian heavy, sour crude. A sudden increase in costs might force these refineries to pass higher prices on to consumers, with estimates suggesting that U.S. gasoline prices could surge by as much as 75 cents per gallon overnight. Recognizing the potential economic fallout, the Canadian federal government has rolled out a comprehensive aid package valued at $6.5 billion Canadian dollars. This package is aimed at helping Canadian businesses, spanning exporters, agricultural producers, and food manufacturers, adjust to the changing trade environment. The support includes grants for market exploration, low-interest loans for operational adaptations, and funding for international trade missions. These measures reflect the government's commitment to buffering domestic industries against external shocks and ensuring the country's economic resilience amid uncertain global trade dynamics. In parallel with the oil sector's transformation, Canada is making significant strides in diversifying its natural gas exports. The LNG Canada project in Kitimat, British Columbia, is nearing completion and is set to start operations by late 2025. With an investment of about $40 billion, this project is one of the largest private ventures in Canadian history. It promises to open vast new export avenues for Canadian natural gas, particularly targeting Asia's growing demand for cleaner-burning fuels to replace coal. This joint venture involves major global energy players such as Shell, Petronas, PetroChina, Mitsubishi Corporation, and Kogas. Their participation not only underlines the international confidence in Canada's energy potential, but also highlights the strategic importance of developing a diversified export base. The LNG Canada project represents a vital complement to Canada's crude oil exports and is set to further cement the nation's status as a key player in the global energy market. Historically, Canadian exports to China have focused on commodities like canola, wheat, and wood pulp. However, geopolitical tensions, including disputes over human rights, cybersecurity, and past controversies such as the Meng Wanzhou affair, have strained these traditional trade flows. Despite these challenges, energy exports to China have seen robust growth. In 2024, Canadian crude oil exports to China increased by 22%, reaching approximately 184,000 barrels per day. This growth not only demonstrates China's strong demand for energy, but also reinforces Canada's potential to become a critical energy supplier to the Asian market, offsetting declines in other commodity sectors. Looking ahead, Canada is exploring additional infrastructure options to further diversify its export routes. Proposals such as an Arctic pipeline corridor, although ambitious and fraught with environmental and logistical challenges, have been floated as a means to facilitate direct shipments to Europe and Asia. Other concepts include modifying or reversing existing pipelines toward the Atlantic coast, potentially leveraging ports like St. John, New Brunswick, to open new maritime export channels. Support for market diversification cuts across Canada's political spectrum, though the approaches differ. Conservative leader Pierre Poilievre advocates for reviving major pipeline projects such as the previously proposed Energy East and Northern Gateway to transport Alberta's crude directly to both coasts. On the other hand, the governing Liberals emphasize a balanced strategy that couples infrastructure expansion with stringent environmental protections and ongoing efforts to reconcile with Indigenous communities. Trade Minister Mary Eng has been active on the international stage, engaging European Union officials to strengthen ties in critical minerals trade and energy partnerships. These initiatives reflect a comprehensive, multifaceted strategy to reduce Canada's vulnerability to U.S. trade policies while expanding its global influence. Ultimately, Canada's strategic pivot represents a decisive move toward economic autonomy and resilience. By investing in transformative infrastructure like the TMX pipeline and LNG Canada, and by actively pursuing new international markets, Canada is repositioning itself as more than just a resource supplier. It is emerging as a dynamic global energy powerhouse. This realignment is not solely a reaction to immediate U.S. tariff threats. It is a long-term reimagining of Canada's role in the world's energy trade. As the effects of these strategic initiatives begin to materialize, 2024 is likely to be remembered as a watershed moment for Canada. The entry of Rangsheng Petrochemical in Calgary, the operational start of the TMX pipeline, and the imminent launch of LNG Canada collectively signal a new era. An era in which market-driven flexibility, robust government support, and a forward-looking infrastructure strategy converge to redefine Canada's energy landscape. In conclusion, Canada's ongoing efforts to diversify its energy exports mark a historic shift toward reducing reliance on the United States and tapping into new, lucrative global markets. Through strategic investments and bold policy decisions, Canada is setting the stage for a future of greater economic sovereignty and long-term prosperity, even as it navigates the challenges and uncertainties of a rapidly evolving global energy environment.